FTX United States might soon be pausing trading availability. As I've said over the last few days, it's time to get out. And while I don't want to encourage a bank run, especially for a company that I've suggested people sign up for in the past, I hate to say it, it's time to go. I don't think anybody saw this one coming. It's quite sad, but ultimately, we still have time to move, which is good. Withdrawals have actually been reactivated on the international version, FTX.com, briefly, though so far only about $8 million have been able to be withdrawn so far this morning and Thursday in a 1-hour time frame. I think that's relatively low. But in addition to this potential threat coming to FTX US, which is likely because of the common ownership that you have between FTX.com, the international wing, and FTX.US, even though they're different systems and platforms with common ownership, and the SEC and White House now watching FTX, probably going to get a shutdown at FTX.US, the US version, pretty dang soon. So get ready, and personally, get out, is my opinion. Now, what updates do we have on the situation? We've got updates from not only this potential shutdown coming, but we've got updates on Sam Bankman-Fried, some comments from him, and we also have some insight into how this went so wrong at FTX. So we're going to talk about both of those. Let's go ahead and start with what Sam Bankman-Fried just tweeted. And then let's get into how could this go so freaking wrong? After all, Binance pulled out of the deal, which we already knew about yesterday. In fact, I was on Yahoo Finance just minutes before Binance canned the deal, and I'm like, they should walk. You don't know who owns them. Anyone who's ever tried to sue Binance has ended up giving up on their lawsuit because you can't even figure out who owns these companies. So what's the fallout here? Well, I think Binance probably smart from walking away from the FTX deal. I think they'll take a multi-billion-dollar loss trying to bail out FTX. That could lead, unfortunately, though, to more liquidations. We don't know how bad those will get, but if we see large liquidations because of an FTX bankruptcy, that could move over to the US FTX version, since they have the international wing and the US version. And then ultimately, if prices got low enough, you could even see, I hate to say it, but you could see a company like even Binance go under, and that's the last leg standing.
I mean, so what do you think that Binance saw when they looked under the hood at FTX? And when you do have so much power consolidated here, what does that mean for the broader industry?
Yeah, I think what happens is you look at the books of FTX, and what you'll probably see is, hey, you've got $6 billion, roughly. This is what Bloomberg and some commenters on Bloomberg are estimating. You've got about $6 billion that people are trying to withdraw. And Binance probably looked and said, well, you've only got one, or something like that, right? We're estimating. And so Binance has to decide, do we want to cover that loss, that $5 billion difference? Is that worth it to us? And how many customers are we going to get after that? The big issue, though, is if everybody's bailing out and leaving the centralized platforms, then what's the point of bailing out FTX if you're going to get a shell of a company? So this is probably where it would be a lose-lose situation for Binance to buy them, because they'd take a loss and then not have the customers. But if they don't bail out FTX, we could see liquidations that could also then in turn hurt Binance if the underlying value of their cryptocurrencies, like their Binance token, collapses, which is possible. And then you just don't have centralized cryptocurrency left. Everything's just, you either have it on a cold wallet or it just becomes worthless.
So what's Sam Bankman-Fried up to right now? Well, here's what he's saying on Twitter. First, he shows us this account with like $6,300 in it. You know, I don't know if he's trying to flex because he's bankrupt or if he's trying to be relatable. But anyway, he starts off this like 20-page or 20-post tweet storm by talking about Send, which is basically him talking about how much easier they're going to try to make it for international sending of money. Keep in mind, they're looking for like a multi-billion-dollar bailout to help provide them liquidity so they can survive. So he's kind of got to prop up and sell FTX, even though it's basically bankrupt. So the first few posts, he talks about this. Then he says, take a deep breath now and talk about the future. So talks a little bit about respect, including respect for CZ. And let's hit some of the core posts that actually give us some real interesting insight into what's going on. So first, Sam Bankman-Fried says that, note, FTX.US and Binance.US, two separate companies, are not currently impacted by the FTX.com issues. And that's worth noting. It's something that I just started this video off with as well, but I expect pain to come potentially to both of these platforms if we continue to have liquidity issues in the crypto market. Now, the good news is we had, thank goodness, soft CPI this morning, consumer price index, inflation reads, and that's actually propped up Bitcoin a lot. I mean, look at this on the 1 minute chart, you've got a lot of volatility. But let's go to the 1 hour chart here. Look at that pain we had yesterday going down to 15.5, bouncing up to almost 18,000 here, getting rejected to 18,000, now sitting at 17.3. As long as BTC can really hold over here, this is going to be critical for liquidity for these other firms, though they don't have some of the similar issues that FTX has or had. And see, this morning, JP Morgan warned of like a rush of margin calls coming to the crypto industry that are still being fulfilled, and those could push BTC down to 13,000 they projected. Although of course that projection was made before the CPI numbers came in as soft as they did. So maybe some of that pain will be alleviated. All right, so now getting to the juicy thread. So here we go. First he says, I'm sorry, that's the biggest thing. I effed up and should have done better. I also should have been communicating more recently, that is with more transparency. But his hands, he says, were tied during the duration of the Binance deal. I mean, that's kind of BS because the Binance deal wasn't actually happening until you hit crisis level. And over the weekend and last week, you're like, we don't have any liquidity issues. We're fine. Everything's good. All the rumors are fake news. And they turned out not to be fake news, right? That's like the opposite of transparency. Then here's the update. This is all about FTX International, non-US exchange. FTX users in the United States are fine, he says. I don't buy that as far as I can throw it. I would not trust it right now. We could come back in the future, maybe. But for right now, I'd be out. Anyway, FTX International currently has a total market value assets collateral higher than client deposits. Okay, well, keep this in mind, that FTX International currently has a total market value of assets divided by collateral higher than client deposits. This may be true, and this means the company's not insolvent. Insolvent is when you owe more than your company actually has in assets. So if you have 1,000 computers worth $10 million, those are your assets. And if you have debts of $20 million, it means you're insolvent, like you're upside down, right? However, it depends what they're calling assets. What if he's saying, well, our intangibles, like our brand value, are worth $20 billion, and that's worth more than all of our collateral. So this is not necessarily liquid assets, right? So that's a little bit of a red flag to me. I wouldn't trust that. I think it's a sales pitch to, ironically, unsavvy venture capital investors, but okay. Full story here is one I am fleshing out every detail of, but as a very high level, I effed up twice. The first time, a poor internal labeling of bank-related accounts meant that I was substantially off on my sense of user's margin. Okay, first of all, are you like literally the only dude who's sitting at a computer like, oh yes, these are our bank stresses and balances right now? Like, where's the team, right? Like, where are the automatic selling tools for when a collateral falls and things need to be sold on margin? See, a lot of people at FTX were using, we believe, the FTT token as collateral because they were getting yields on FTT. And then so they had FTT parked as collateral. And then what they do is they go borrow money against that FTT to go buy Bitcoin. So let's say you had $200 of FTT, maybe they'd let you buy $100 of Bitcoin. But as Matt Levine put it this morning on Bloomberg, that is the perfect way to set up a death spiral. And it's the stupidest thing to do because basically, if people get concerned about the stability of FTX as a brokerage, a crypto brokerage basically, then the value of FTT goes down because it's kind of like the value of FTX because FTX created the token FTT and FTX promised to buy with profits more FTT token. So in some way, FTT token is propped up on how strong FTX is as a company. But the problem with that is if FTT loses value and then people question the value of FTX, then FTT goes down even more. And if T goes down even more, you start having margin calls on other people's assets, which leads people to want to leave the platform, leads to more pain. And so what happens? FTT becomes less valuable. Then you start getting a potential bank run essentially on FTX. Now FTX becomes becomes less valuable, right? They both lose value. But if FTX becomes less valuable, then so does FTT. So you have this like stair-stepping death spiral disaster of FTT gets less valuable when FTX gets less valuable. So if people are using FTT as collateral and they're getting margin called at FTX, you have a crisis of a situation. This is different from what you have with big banks, because think about it. If you have a $2 million margin account, and let's say you're in on Tesla stock, and you're out you take $2 million of margin out in cash. Well, let's say you park that cash somewhere, your cash doesn't become less valuable because your Tesla stock went down. And JP Morgan as an institution doesn't affect the value of your Tesla stock or the value of your dollar. Whereas FTT goes down when FTX becomes more risky. And if FTX becomes more risky, FTT goes down and you step down. It's terrible. That connection is so terrible. And that's how you get this death spiral of a collateralized nightmare. So my sense before, 0x leverage, USD liquidity ready to deliver 24 times the average daily withdrawals. Actual numbers, they only had 80% of the needed withdrawals on Sunday, and leverage was actually 1.7x, which means it's actually a lot. For every $100 of assets somebody had, people were actually about 70% leveraged. That's crazy. And so, of course, when it rains, it pours. We saw roughly $5 billion of withdrawals on Sunday. That's a pretty good estimate because Bloomberg yesterday was estimating $6 billion. That's pretty dang close. So I was off twice, which tells me a lot of things, both specifically and generally, that I was bad at. And a third time, I'm not communicating enough. Well, yeah, that's obvious. Anyway, so then he apologizes and says we're human, says that right now the priority is do right by users, which some people are like, so are you going to make people whole? But he probably can't because he's bankrupt, as some people say, no guarantees. So that's just an opinion. So right now, we're spending the week doing everything we can to raise liquidity. I can't make any promises about that, but I'm going to try and give anything I have that'll make it work. There are a number of players we're in talks with, letters of intents and sheets. We'll see how it ends up. Basically, he's asking everybody in the world, like, hey, we'll give you equity in FTX if you could just bail us out, basically, right? At the end of the day, I was the CEO. That means I was responsible and he failed. So what does that mean going forward? I have no idea. Also, we're basically closing down Alameda Research because it's worthless anyway and we screwed up. And in any scenario in which FTX continues operating, its first priority will be radical transparency. Well, which kind of should have been done in the first place, which you think it would be in blockchain. It's kind of weird that he's talking about these like transparency issues when technically everything's on the blockchain, right? So it's like, it's like time and time again, we're in these situations where, blockchain's transparent, but then something crazy happens and then it's like, well, I guess it wasn't that obvious. It's like, dang it. So there's definitely a lot of cleanup to do here, and I think regulation is really going to help here. Some other comments. This is all about FTX International. The US-based exchange, which accepts Americans, is not financially impacted. It's 100% liquid. Dude, we've heard this a million times before, okay? This is what Bear Stearns told us too. So, and then he gives some kind of generic disclaimer here. And yeah, that's the latest update with an apology that we have from Sam Bankman-Fried. So, and again, remember, look at this. Sam Bankman-Fried did tweet this on the weekend. A competitor is trying to go after us with false rumors. FTX is fine. Assets are fine. Details, right? And then we have that tweet actually being deleted one day later. So, okay, where do we stand? Well, where we stand is the FTX token, because of Bitcoin's rally, is actually up. And because there is some hope that some withdrawals are returning, the FTX token is actually up. It's marginally. It's up about 2% at the moment. It's still only at $3.63. So, I mean, I guess up is relative when you're down like, a lot. Remember, this was trading for about $50 earlier in the year over here in April, trading for $3 now. So if you do 3.66 divided by $50, you're down 2.68%. It's not exactly the best performance here. And you're down from 366 from $26 just a bit ago, you're down like 86%. So sure, the fluctuations on this are going to be wild. In fact, the fact that it just went from plus 2% to plus 6% implies the liquidity here is very, very thin. When the order books are thin, you get very, very quick movements in either directions. All right, so big bottom line out of all of this. There are other brokerages who don't use their own token for collateral, like banks don't do that. I don't believe Binance does that, so that is a benefit to Binance. I don't believe Coinbase does that, so I think that that's a benefit to Coinbase. I do think that the liquidity crisis we are seeing is going to take probably a few weeks to play out, and it could lead to some other shoes to drop. So I do think there's still downside potential for cryptos. However, they are going to be propped up with the rising tide of the stock market moving up very nicely because of what could potentially be peak inflation. This means a lot of the stress on the crypto market could actually settle down and calm down. And the way to play this, in my opinion, is maybe if you're thinking about, hey, when should I get back into crypto? My thought is, well, certainly after you get your 60% off on the amazing courses on building your wealth link down below, including the entrepreneurial new course, Elite Hustlers University, and the Zero to Millionaire Real Estate course, or the stocks course, or the other ones. But I would probably wait until after the next CPI report, because I think that's the game changer. If December 13th reiterates low and peak inflation, perfect. Maybe, and we have stability by then, maybe it's safe to go back in. If, we get bad CPI in December, then I probably would wait to see what other things crack. So anyway, these are my thoughts. Thank you so much for watching this video. Consider subscribing, and we'll see you in the next one. Goodbye.